Hello everyone. Last night, Reliance Industries, Infosys and Axis Bank, three major Indian companies in three different Indian major sector released their earnings results. So in this video, first let's discuss those in detail and then we'll discuss our regular pre-market report for today 17th Jan 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, about Reliance, this is the top line preview we discussed yesterday. Quarter over quarter, their consolidated revenue increased by 4% to 2.39 lakh crore rupees against expectation of 2.37 lakh crore rupees. Similarly, analyst expects the EBITDA to increase 7.6%, whereas in actual it increased by 12% to near 44,000 crore rupees. Margin 2 improved and higher compared to analyst expectation. The only thing I can't able to confirm was adjusted net profit, which seems slightly below the Bloomberg expectation, but 2,000 crore rupees more compared to September quarter. So top line was really very good. Segment wise, though oil to chemicals revenue dropped due to the drop in export, refining margin improved to 9.6%, whereas analyst expects only about 8.6%, and in the previous quarter it was just 8%. Hence, sequentially, oil to chemicals operating profit increased by 16%. So, petroleum segment good. We discussed this exactly same thing 3 weeks ago in some pre-market video and also in our option strategy video. Anyway, what is not good though is Jio's ARPO. Market expected to be around 206 rupees per user, but unfortunately it came only 203.3 rupees per user. So sequentially it increased only by 5% against the expectation of 6%. Then about retail business segment, according to me, it was also okay, no red flag. Its margin improved by 20 basis points. And the highlight here is in 2022, Reliance bought the Campa Cola for 22 crore rupees. That this quarter crossed the revenue of over 1000 crore rupees. And also Reliance management explained their plans to take Campa Cola to international. Overall, quarterly results was good, and as per GDR reaction, it looks like market taking this as positive, as Reliance GDR in Europe increased over 2%, and if we calculate the arbitrage, the difference expected to be around 1 to 2% positive. Then second, about Infosys, revenue up 1.89% sequentially against the expectation of 0.8%. Similarly, net profit also increased 4.69% against the expectation of 4.3%. So as a top line, financial beats the expectation. Even on the constant currency term, they increased their revenue guidance to 4.5 to 5% from previous 3.75 to 4.5%, which is very good in line with the expectation. However, while answering the analyst queries in the post-earning call, management acknowledged the fact that they are expecting a weaker Q4 quarter. In addition, their attrition rate increased by 13.7% from earlier 12.9%. Again, in addition, they stated that they are going to increase the salary hike of only 6 to 8%, which expects to increase the attrition rate further. So, market took Infosys quarterly results as very negative. In fact, Infosys ADR dropped near 6%, and as an Infosys consequence, Wipro ADR dropped 4%, which is due to release their earnings tonight. And if you see the arbitrage means Infosys having a negative arbitrage difference of over 2.5% and Wipro around negative 1%. So looks like despite posting good quarterly results, market don't like the result. Then finally, regarding Axis Bank, they posted good net interest income increased by over 9% to 13,600 crore rupees, which is in line with the analyst. However, they increased the provision allocation to 2,150 crore rupees. In comparison, last year it was only 1,030 crore rupees. In fact, in the last quarter also, they allocated 2,200 crore rupees provision. This increased provision allocation now questions the bank's future asset quality. So I don't like the result, but based on ADR reaction, it looks like market didn't bother like Infosys negativity, but still negative. As it is, ICICI Bank ADR closed positive, but HDFC Bank ADR closed negative. And if you calculate the arbitrage, both banks roughly having negative 0.5% difference. Overall, Reliance looks good, but Infosys and Axis Bank not looking good. Then coming to US, last night before their market opening, Census Bureau released the December month retail sales data. I mean, on both cases, month on month and year over year, retail sales in December month decreased compared to November month and also below the expectation, which is what market wanted since it increases the Fed March month rate cut probability. In addition, more US banks posted positive earnings. Those were positives. But on the negative side, there was a report released by some private company that Apple phone sales in China dropped by 17% in 2024 compared to 2023, which in turn made the Apple stock to fall by over 4%. This, with the profit booking, made all three US major index to close negative. In the end, Dow Jones down by 0.16%, S&P 500 down by 0.21%, and Nasdaq decreased by 0.89%. In case of VIX, it increased by 3% and moved to 16.5 from around 16 yesterday. Whereas oil haven't changed much. At the time of this video, WTI crude trading around 78 US dollars per barrel, whereas Brent crude is at 81.5 US dollars per barrel. Thus, as a summary, global momentum deteriorated compared to Wednesday night, and in addition, we can expect a pressure from Infosys and Axis Bank. In line with that, GIFT Nifty early morning today traded at 23,323, indicating the gap down opening of around 50 to 70 points. However, as we discussed, Reliance quarterly results looks positive, not sure how much it will support today. Moving on, yesterday as per stock open interest, KPIT Tech, BPCL, Dr. Reddy's, ITC, Bata India, Hindustan Petroleum and Torrent Pharma got an increased open interest along with a negative close indicates the short build-up. On the other hand, MCX, SBI Card, Apollo Tyre, Divi's Lab and Ramco Cement got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, Wipro, Tech Mahindra, SBI Life Insurance, ICICI Lombard General Insurance, Indian Hotels, Jio Financial Service are some of the major Indian companies' earnings results are still released today. In terms of macro, before our market hours, lot of Chinese macro like GDP data, industrial production data and retail sales data, etc. all are due. Then during our market hours, Europe consumer inflation is scheduled to release. And finally, in the aftermarket hours for US, lot of housing related macro like building permits and how many house they start to build, etc. US industrial production growth rate are the important items we need to keep an eye out today. One more thing, no stop in FIS selling. Yesterday too, they net sold for 4,350 crore rupees, whereas as usual, DIA to some extent they supported the market as they net bought for near 3,000 crore rupees. Coming to technical, Nifty opened 160 points gap up and was in the range bound between 23,400 to 23,250, then closed at above 23,300. Thus, on the daily chart, Nifty formed a bearish candlestick pattern with continuing the formation of higher high for another session. In addition, hourly momentum indicator has a positive crossover, indicating that there is some counter trend pullback. However, same as yesterday and last 1 week, Nifty is still trading below all key moving averages and traded near the lower end of the Bollinger Band with RSI and MACD momentum indicators was in the negative territory. Therefore, Nifty is expected to consolidate with immediate support at 23,150 followed by 23,050 January low. In the event of a continuation of the uptrend, the key hurdle is at 23,500 as above this level, the 200-day exponential moving average at 23,680 will be the next level to watch. In case of Bank Nifty, it opened 330 points gap up and increased closer to 49,500 mark intraday. However, closed at below 49,500. Thus, on the daily chart, Bank Nifty formed a bullish candlestick pattern and for the third consecutive session, it maintained higher high, higher low formation. However, same negativity as Nifty, it was in the lower Bollinger Band and below all key moving averages. Hence, as an overall, Bank Nifty touched its 10-day exponential moving average of 49,416. If it sustains above this level, the next target is 20-day exponential moving average at 50,150. On the options front, the maximum call option open interest was at 24,000 strike, followed by 24,500, 23,800 and 23,500 with maximum new call option rating at 23,400 strike and then 23,300 and 23,350. On the put side, the maximum open interest was at 23,000 strike, followed by 22,500 and 24,000 with maximum new put option rating at 23,400, 23,300 and 23,000 strikes. Thus, from options data, Nifty may trade within the range of 23,000 to 24,000 in the short term with immediate resistance would be 23,500 level. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.